प्रकाश जी बोलिए। हाय। एक्चुअली प्रकाश जी उस दिन कनेक्ट नहीं हो पा रहा था, मैं आपको आप मुझे फोन कर रहे थे, मैं आपको कनेक्ट नहीं हो पा रहा था। आपका सेमिनार था।
हेलो, हाँ आहे ना।
Not able to connect, not able to.
हाँ, प्रशार भी आ गया। वो क्या क्यों निकाला स्मार्ट NAR?
Testing, can you guys hear me?
प्रशा, तेरा आवाज आ रहा है। जब तक आप ज्वाइन नहीं होगे ना, आपका आवाज नहीं आएगा। आपको ज्वाइन करना पड़ेगा।
किसको बोल रही थी?
अरे मैं अजीत को बोल रही हूँ।
Ajit is not yet come.
Hello.
Hello, Mr. Andrews. How are you?
Yeah, morning, gents.
Swapnil, unmute yourself. You're on mute.
I thought I lifted it. Can you hear me?
Yes, we can hear you.
Okay.
Chat disable कर chat.
Swapnil is on mute.
Yeah, disable कर दे. Thirty-seven participants are already there. Huh?
Am I audible now?
Swapnil.
Prashant?
Yes, but there's a lot of background noise.
Sorry?
There's a lot of background noise. My voice is echoing.
One second. Okay, Prashant, am I audible now?
Yes, loud and clear.
Hello? Audible. Okay. Prashant? Hello? Yeah, I can hear you.
No, you can hear me from mobile, but some setting there. I can see your screen, but your
Hi, Suman. Good afternoon.
Good afternoon, Swapnil.
Hi, how are you? Good to see you.
Good, yaar.
Hi, good morning, Shalib sir. Good afternoon, rather. Welcome on board.
Good morning. How are you?
Good, sir. Good. How are you?
Very well, thanks.
Thanks for obliging.
My pleasure.
We are just going to go live in next 5 minutes, sir.
Okay.
Sure. हाँ जी हाँ फोनवरनच करा मग आता जाऊन द्या लॅपटॉप नका करू फोनवरनच या ठीक आहे
Hi.
या मनीषा
That was Miss Jyoti.
Yes.
Oh, sorry. Hi, Jyoti ma'am. Good afternoon.
Good afternoon. Yep. Hi.
Hi, Jyoti ma'am.
Are we online already? Are we live?
No, we are not. We are just waiting for one more panelist to join us, and then I think in the next 5 minutes we should be live, ma'am.
Okay. So, Swapnil, just quickly, have you shared that link for the colleague?
Yeah. I have just done that, so you can check with him now.
You just done that. Okay. Just hold on.
Swapnil, you may just want to send it to the right, or send it to, he's not got it yet.
Okay, I'm just going to do it right now. Give me 2 minutes.
Nice to see everybody here.
Morning.
Is everybody somewhere around near me or is all across the globe?
Well, no, we are all across the globe, ma'am. I'm in
Okay.
Mumbai.
Okay. And you, Sharad?
I'm in Mumbai as well.
Okay. And
Sunny
Andrew?
Maharashtra.
I'm in Essex, near London.
Nice. How's it there?
Beautiful. Indoors.
Yeah, you guys are more effective indoor?
Pardon?
Is it more efficient being work from home?
Much better. I can take the dog for walks and go straight back to my desk.
That's not a good time for real estate then. If everybody's going to start working from home, that's not good.
Yeah, but we don't have to do any viewing, so it's just as easy to work from home. It's even better because you've got an extra hour. You don't have to travel each day, so it's better to be at home. I've got a good setup now as well.
Yeah, absolutely. So you've got both players. You've got Ajit, you've got Manisha, you've got and Sumant. Where are you from?
Hi, I'm from Nellore. I'm at Nellore actually. I'm from Hyderabad. So currently I'm locked in Nellore.
Nellore. Oh, okay. Why do you say locked in?
Yeah, so I came for a family emergency. So I'm stuck here.
Okay. Good. But aren't they allowing you guys to drive now? I mean, I think in India it's pretty. I mean, they've opened.
I think they're just relaxing now. So you need to get a pass for traveling. I'm just waiting for the same.
And is that a very high ask to get a pass to travel?
Yeah. So a lot of things have to be in place. So unless and until you give a genuine reason, they're not allowing you to travel.
Wow. Okay. So that's a tough one. Yeah, that's a tough one.
So I'm stuck here for the last 45 days.
With your family, I presume. I'm sure it's with your family.
Yeah.
That's
So that's a blessing. Yeah.
There's so many offers who are just scattered around, with kids going to colleges and, with spouses traveling. So we're just scattered.
Yeah, absolutely.
Yeah. So yeah, it's one of those.
So sometimes I feel it is. I think I want to feel that it's unreal. I mean, at least.
Yeah. Yeah. So in Dubai, for us, it's been like, so we had the partial way of doing things. So we had a so-called 3 weeks work from home, which was nice. And it actually was a great efficient way of doing it. I really enjoyed it. Then they started opening up. They say, you know what, you got to take permissions to come out for general things. Then, of course, when you say general things to public, so obviously everybody wants to go out. And then within a week's time, they sort of controlled it and they said, no, it's only essential. So we went essentials. Then from essentials, then further said, okay, you know what, now people can come out for 30% of you can come out. So I think in Dubai, we feel back to normal in terms of mobility, but it's still limited. I mean, but again, we don't see much of it. Obviously, we don't see much of traffic around because one, it's Ramadan here, which is strictly followed. And very soon the summer also, the holiday starts coming up. The kids are not around. Everybody's online. So we really don't feel that much of a, yeah.
Are the shops and restaurants closed in Dubai? So public places?
Yeah, the malls are open, but again, of course, they're only up to a certain capacity who can go into the malls. So obviously there is a lot of scrutiny at the entrances. That's there. Restaurants are open for takeaways.
Okay.
So you have your Deliveroo's and the Uber Eats going around, but you still have your restaurants. Restaurants are open. And I'm assuming that from this week, they are also going to get permissions for dine-in with the social distancing concept being put in place.
Wow.
So I was last weekend, I went to one of those Mexican joints to do a takeaway. And I asked the guys, I said, are you allowed to dine here? He says, yeah, from Monday, which is like from yesterday. They were waiting to get permissions from the health authority. They could.
Wow. That's a long way ahead of India right now.
Yeah, you know what? I think the takeaway here is, I mean, obviously, the takeaway here, at least for Dubai, is that, you know, with the population that we have, roughly about 9 to 10 million population, they are one of the, I think, the top leagues in the world. I don't have the numbers, but I know they're one of the top 3 or top 5, where the number of testings that they're doing per day is quite high. But having said that, for every quantity of tests that they do in the population, they're also getting roughly about, I would say, 2 to 3% of infected cases. So we don't see a plateauing. At one point, we saw the cases about 200 to 300, then 400, then 500. It's now in 700. But we also see the test cases are also high. So they're doing about 35,000 to 45,000 tests per day, you know. There are a lot of those self-drive centers. If you think you're not well, they encourage you to please go do a test, even if you have to pay it, you know, do it. And once the test result comes out in about 3 to 4 days time, and then you have an email coming to you and telling you, you know, that X, Y, Z, and then of course it goes on. So I think it's just about accepting the fact that it's going to be part of your life today or tomorrow, maybe down in winters. So you just as well accept it.
Hi to everybody. Can you all hear me?
Yes.
Good morning.
Ajit Rao. Yeah. Sorry, I had a little teething problems joining in from the iPad.
No, that's good.
Okay.
There we are. Okay.
Yeah, so Jyoti ma'am, I have already sent the link. So I think you should check with Kshitij.
Yeah, Kshitij is there. I can see him there.
Okay, sure.
Yeah, I got the link. Good afternoon.
That's it.
Okay, I think we're good to go, Ajit.
Yeah. Why not?
We have about 450 participants, and I think we should start.
Yeah, the registration is more than 1,000. I think all will be on Facebook and YouTube.
Yeah, sure.
Shall we start?
Yeah, Ajit, you can go ahead.
Yes.
Okay. A warm welcome to all the distinguished speakers on board. Andrew Moores from London, Jyoti Keshan from Dubai, Arnav Gusan from WeWork. Is there somebody else in place of Arnav?
No, Arnav sir is himself there. Good afternoon,
Okay.
Arnav sir.
Hi.
Good afternoon. Sharad, and a warm welcome to all the participants, and thank you all for taking your valuable time out for this interesting session, which shows your willingness to unlock yourself to unlearn and relearn from these expert panelists who will help you explore and evolve. And I'm sure by the end of this hour, you will yearn to exhale these opportunities. Before I let Swapnil take over, I would like to credit all those who have been instrumental in these efforts of ours. Our gratitude to the Managing Committee of SMART, especially Manisha, our Joint Secretary, Prasar, our Vice President, Sumanta Reddy, our President of NAR India, Samir Arora, Secretary NAR India. Not to forget the support we have had from Vidisha, Apurva, Nina, Jennifer, Pooja, Shefali, Deep from Ahmedabad, and Jignesh. And how can we forget our own Swapnil for conceptualizing this beautiful webinar. So friends, this is Ajit Rao, President SMART, signing off to open this illustrious platform and request Swapnil to take it forward. Stay blessed, stay safe, and let's learn. Swapnil.
Yeah. Just give me a second. Yeah, hi guys. A warm welcome from all of us at SMART and NAR India. When we conceptualize this event, actually, we would not have expected a better panel than this. I'm really glad to have you all on this platform addressing our friends, realtor friends in Bombay and all over the world. So to start with, I would like to introduce all my panelists here. So first, I will start with Jyoti ma'am. Mrs. Jyoti Keshwan is one of the most dynamic entrepreneurs that I have ever met. She's a fourth generation entrepreneur in UAE, based out of UAE. I think she's seen Dubai like nobody else have. She's literally seen Dubai grow from sands to skyscrapers. Yeah, so that's the kind of time she spent in Dubai. So Jyoti ma'am, I want to really welcome you on board. Jyoti ma'am represents Zanara Capital, which is an advisory firm and wealth so basically they're managing a lot of family offices. They help in pension funds invest their monies across globe. So I'm sure we are going to have a fantastic insights from Jyoti ma'am today. Thank you ma'am once again coming on board. My next panelist is Mr. Sharad Goyal. Mr. Sharad Goyal is, we were desperately trying to have somebody very, very senior from a warehousing and, advisory background. And thanks to Mr. Rajesh Jaggi, who actually connected us to Mr. Goyal. Mr. Goyal is a fantastic human being, more than anything else. Before I start talking about his accolades and achievements, he's a fantastic soul, because at a very, very short notice, he agreed to be on this panel and address you all. So thank you, Sharad bhai, for that. And when I individually come to you, I'm going to introduce you a little more on the things that you do. My third panelist is an international speaker, Mr. Andrew Burris. Mr. Andrew has been representing Sterling Woodrow, and he's a thorough expert in basically your housing segment in US, buy to let. Housing which is buying specifically for letting. So it includes your purpose-built student accommodation, and also includes your hotel hospitality industry, which is leased back. So welcome on board, and I really thank you for obliging and coming on this board. It is 9 o'clock, 9 a.m., 8:30 actually in UK, so it's too early for him to get out of his bed, but really thank him. My fourth panelist is, a very, 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 again, very gentlemanly guy who has agreed to be on panel. He had very, very critical and important assignments today to be done, but he's obliged us and he's with us on this panel. My fourth and best panelist today is Mr. Arnav Singh Gosan from WeWork. A lot of people actually, when we spoke to them, they wanted to understand this industry specifically, and we have got the best in the industry today, the leaders of the market. And Mr. Arnav Gosan, he is heading the real estate and products division in WeWork today. So he's basically the head of the development in Indian markets. Mr. Arnav. Hello.
Hi, Swapnil. Thank you.
Hi, sir. Hi. It's good to see you working out of your, shared co-working space kind of structure. So it tells a lot about the, scope for that segment.
We're back in operation.
So fantastic.
India has opened up slightly. So sitting out of office just to tell people that it's something that now we have to live with, and we cannot stop business, but we can adapt and see how we can operate.
Sure. So with this small introduction about our panelist, I think we'll move. And now I would like to introduce a guy who needs no introduction, basically. So hello, yeah. So he is our very own.
Swapnil, we have lost you.
Yeah, sorry. I think some issue with the connection here. Is it okay now?
Yes, very good.
Okay, sure. So I would now like to introduce our very own, guy who needs no introduction on this forum, the leader of our NAR India, President, Mr. Sumant. Mr. Sumant, are you there?
Yes, Swapnil. I'm pretty much there.
Yeah, hi Sumant bhai.
Yeah. Thank you guys
Thanks
for
for
inviting me here.
obliging. Thanks for obliging here, and having this in association with NAR India is a fantastic thing, because we have so many of participants from NAR India. So
Thank you.
Sumant,
Thank you,
I would
Susan.
just like to start with you. If you could just address.
Swapnil, I lost you.
He's having some serious problem there.
Swapnil, I think you're having some serious problems. We have an hour to go. We could have easily scheduled this at any of the WeWork near a center. Swapnil, Prashant, give me a call. Yeah, we have lost you, Swapnil. Okay, you do that, yeah? Okay. Yeah, he's having some initial teething problems with the connection. Prasar, can you unmute yourself? Prasar? Okay.
Yes, Prasad. Tell me, sir.
Yeah. Prasad, we had the introduction of Samantha, and you have the questionnaire with you. And why don't we start off with that, so that by the meantime, Swapnil will join in.
Yes. So Sumant, how are you today on this fantastic day?
Good, yeah.
Great. Sumant, if you can kindly just, if you can just kindly, brief us on how we realtors can, help this alternate industry, this real estate industry, and how are we geared up, to push for this kind of, co-working, warehousing space. So if you can just speak on it, it would be nice.
Yeah, thank you, Team Smart, for giving me this platform, and thank you, Sir Prasad. See, personally, I feel that a realtor is a true ambassador of the real estate sector, because he is the one who is on the ground. So he is the one actually who is in touch, constant touch with the markets. Because if a realtor is really positive about the markets, I think he can really push or drive any markets. So what we're trying to do at NAR India is to see to that actually, all the realtors are in positive spirits, because once we are positive, I think things will definitely be, falling in place, quickly. Because I am a believer that when people at large actually are positive about their future, they tend to spend money. That's when actually markets open up. When people tend to feel insecure about their future, they tend to save money. That's when actually we have things like recession. So I think it's very important for the realtor to believe in himself and believe in the market, so that he can spread the positive message, which would indirectly contribute to growth of the sector. I agree that actually we have definitely difficult situations at this point of time. There are challenges, but they're not going to be here forever. This is just temporary. And as Jyoti just spoke earlier, I think we need to learn to live with this. And we can't just actually, be just stuck by what is happening around. So we have evolved in the past. We have seen things like this in the past, and we have also evolved from that.
Right, absolutely. So, Sumant, next, if you can just help us on, how do you think that we realtors can help the co-working space and the warehousing and
sorry, I lost the line.
Yeah.
Hello?
Is it clear now?
Yeah, it's clear.
Is it clear now?
So yeah.
Okay. So how we realtors can help this this new alternative field of co-working and your warehousing, and how we can invite these foreign funds to invest in our country?
See, first and foremost thing is that, now we need to first bring positivity in the market, because without that, we can't gain the confidence of any investor. Because only when things start moving forward, right? I think people start actually taking notice of it. And definitely there's no doubt that's of the potential of Indian real estate. And if you see between 2015 and 2019, we almost, actually got about 16 billion plus fund into real estate. So, and into various different classes, and co-working is emerging very strongly. I think they emerged very strongly in the last few years, and I'm sure actually with the kind of uncertainty we are seeing in various sectors, so people would definitely want to bring down their costs. Companies would definitely bring down their costs. So, and for them, the best solution to that is, co-working spaces. And yes, there'll be some aggregators will be facing some challenges, because probably due to their own resources, but definitely the ones who are already established and were sitting on strong resource will definitely be emerging stronger. And we as professionals, so it's as in the past, we should reach out to the stakeholders, explaining them the current situation, and start promoting them in the sector. And as far as warehouse is concerned, warehouses, definitely, I don't think it has been affected in the current scenario, because all the basic necessities and needs are actually, need to be stored in warehouses. So the demand is will continue to grow there, and it's one of the highest paying. It's one of the industries which is paying, great returns. So on an average, we're seeing about 9.5% returns, actually on investment, and some institutional investors are looking at 14% of kind of 14% returns from that sector.
Right. Absolutely. Thank you, Mr. Suman. Now I'll pose the next question to Mr. Andrews. Andrews, if you can please unmute yourself.
Sure.
Hi. Andrews, the first question to you is, with this Brexit not done yet, and this COVID is causing a lot of economic and trade disruption in 2020. Do you think this is the right time to be putting in money in UK, and what is the short-term and the long-term impact on the economy?
Look, it's a great question, and it's a really interesting time. It's almost as if in the last 2 months Brexit never happened. No one's been talking about it. No one's even thought about it, and for the right reasons. But what I can tell you is that Brexit negotiations are continuing. They're going on over video link as we speak, probably. And they must be going well, because otherwise it would be leaked to the press, and a whole drama would have been made of it. So the short term is Brexit is happening. It's due to happen at the end of the year, and the only certainty we'll get is past the 31st of April, so it won't be literally a matter of 2 months away. So the short term is we're the same as everyone. We're all at different stages with the COVID battle, but we're starting to emerge with baby steps out of our lockdown. You may have seen on the news. So short term, same as everyone else. But long term, we are planning for sort of a V-shaped recovery. So, massive step up once we come out of lockdown. You might have heard of the furlough scheme, where people are effectively press the pause button on the economy. So then as soon as we can come out, we can shoot up. And yes, it's going to be baby steps, but there's no getting around it. It is a very difficult time. There's a lot of uncertainty, but what we are very good at as a world population is overcoming this, as we're doing right now with this webinar demonstrates it. So the long-term recovery from the UK. You will find it in months of pain at the moment, but it will recover.
Okay. Taking a cue from what Andrew just said, and the similar type question to Jyoti, now with the 2020 Expo being pushed over to October 21, how do you see the same situation in a short-term and a long-term impact on the economy in Dubai and vis-a-vis the investment potential?
Okay, so for Dubai, for all those who are familiar with Dubai and who are not familiar, we need to understand one thing is that Dubai has been very strategically located country, right? The leaders here have taken advantage of that. So I think predominantly for us, it's about bringing the world together at a one-stop shop, right? So technically, if you had seen years back, you're talking about, ever since I was born here, for me, earlier we used to have a lot of just the local families here. So it's over a period of time, the expat crowd has really built up. A population of 9 million today, we're talking about more than 70% being just expat population.
Wow.
Right? So when you have the world coming into one place like located, I don't know if, I'm not sure if 2020, the Expo 2020 or now the Expo 2021 is a make or break for this country, because this was a feather in the cap for Dubai to having won that kind of strategic award to bring a large event into a country like this. So even without the Expo, Dubai survived through various other crises, the financial crisis, you've had various, the global crisis. So there were so many other things. If you just look at UAE as a whole, with or without the Expo, it's a financial center, it's had the largest towers here, it's built it up to the best of the world-class infrastructure. You have the best talent coming to Dubai. People are making the livelihood. The business is here, the strategic location for a lot of US companies in this country. So I think in a short or long term, the Expo being postponed to 2021, it's not going to have a impactful impact for this country. Maybe it will from a media or from a marketing perspective, yes, it will be a delay. But from a revenue or from a financial perspective, I think Dubai will sail through this situation.
Do you? Because I think tourism being the largest contributor to the economy and post-COVID, tourism is largely going to be affected. And what 2020 was expected to three, four, five-folds of tourism due to the various factors attached to it. So I think, don't you think there will be a little more impact on the overalls?
Yeah, so we're talking about a short term, right? We're talking, let's say just 2020, right? So now with the Expo having moved to 2021, you may see this tourism having an impact maybe for the next, I would say Q3, right? And they're looking to open up the tourism back and the airlines back by the summer of 2020. So once they start doing that, and once they just start following what is required from a health perspective, and they show a little bit more of openness and boldness. And I think it's not just about Dubai, right? Not just about UAE. I think the entire globe, if they just start opening up, then I think it's just coming back with restrictions. That's it.
Sure.
Yeah.
Sure. Now, Sharad, this lockdown has forced many businesses and sectors to restructure actually and re-strategize the business models. What, according to you, will be the impact in this segment, in your segment, post-COVID, and what do you think are the challenges and threats attached to it?
So first, it's a pleasure to speak to everyone here this evening, and thank you for inviting me. I think warehousing in particular is probably not agnostic to the changes that we are seeing. I think the COVID is having a systemic impact across businesses, across sectors, And then in particular in the real estate industry, you know, I think that, and from a customer perspective, every business is now going to be remodeling, reshaping how they adapt to life in a post-COVID world. I think that, you know, if we look at our particular sector, I think there's going to be a tremendous amount of redesigning and reprioritizing across warehouse and industrial parks, people's space requirements. I think you're going to see a further need and push, as we have done for the last decade, for grade A institutional quality warehousing. I think there'll be a high focus on health and safety, on hygiene, on adopting to social distancing within factories, within warehousing space, within manufacturing units, etc. And therefore, how are they going to be able to do that whilst continue to be efficient for their business needs? You know, as a developer and as a park operator, you know, we manage the common facilities, the common areas of the park. So we've already put in different measures in place in which to make those the working environment more safe. So PPE equipment has been procured across, you know, all of our parks. We've got additional security, paramedics on each site, quarantine areas. I think there's going to be a tremendous push on workforce well-being. I think there's, you know, whether it's the tenant or whether it's the landlord, there's going to be a greater emphasis on looking after the human element to this, which is our people. And so whether that's counseling services, whether it's providing free food, travel service reimbursements, I think that's all happening. So there's a tremendous amount of change that we're all going through. The fact that we're all sitting here on a webinar with 500 participants is something we would never have, you know, it would have been much more difficult to arrange in person. So there's a tremendous amount of change that we're doing, and it's how we adapt to it is going to be the true test.
Prasar. Okay.
Great. Thank you. Arnav, coming to you. Arnav, if you can unmute yourself, please.
Yeah.
Hi.
Hi.
Arnav, we've always been the pioneer and one of the largest players globally in the shared working segment. How has your experience been in segment?
In general or during this phase?
No, in general, in the last 3 years.
So, as far as WeWork globally is concerned, it's the pioneer in the co-working space. They came into the segment when nobody was actually seriously into the co-working space. There were a lot of business centers as such, but the emphasis was on the community aspect, and that's where WeWork evolved the business. And past 3 years in India have been great for the firm. Initially, from a global perspective, we was looking at a local partner because real estate plays a huge part in the whole business modeling of this whole enterprise. And they partnered with the Embassy Group here, and Embassy Group being one of the stalwart developers in the country, brought in the real estate expertise and the local know-how. The partnerships has worked really well. In the past 3 years, today we have around 34 buildings across NCR, which is Gurgaon, Noida, Mumbai, Pune, Bangalore, Hyderabad. And we are planning to grow. We've grown to the tune of roughly around 56,000 odd desks, which are operational, and we have visibility up to around another 10,000 odd desks within this year. If everything goes well, we'll be able to bring them into the market as such. So it's been a substantial journey as far as India is concerned. What globally we achieved in 6 years, we've been able to manage in 2.5 years in this country. So we're pretty much confident about what we're doing in the future as such.
Great. Thank you, Mr. Arnav. Ajit, you want to take the next question? Or you need to unmute yourself. Ajit, unmute yourself.
Okay, sorry. It's a cue from the previous question again to Arnav. You asked him about the past 3 years' performance, and now post-COVID, what does he see the impact on co-working space segment, and how would he want we as realtors to, look into this new portfolio?
So as Sharad mentioned earlier, it is a difficult period for all industries, to be honest. It has impacted all sectors, but as Jyoti said, life goes on and we have to keep moving forward kind of a scenario. It will give rise to a lot of innovative solutions and practices in the way we approach our business, in the way we structure our transactions, in the way we operate as industries as such. And those innovative solutions will be distinct to different industries as such. I see a big opportunity, specifically in the flexible workspace area. A lot of companies will still be reassessing as to what their future plans are, how they would want. I don't think there will be a stoppage of growth, but there might be a deferment on growth. And during that period, a flexible space works perfectly well for corporates as such, where they're trying to assess where they need to go. A lot of companies will be saving on capital. That's another area where flexible workspaces come into play. Again, what Sharad was mentioning in terms of health, safety, and hygiene that we need to bring into the way we operate. Here you have in a confined environment professionals who know how to run buildings, doing those kind of aspects for different companies. So it doesn't come on, it's pretty much an outsourced model kind of a scenario. And yet you're trying to develop communities and you're seeing humans are social animals, right? So we need to interact, and we need spaces wherein we can exchange ideas. Now, if giving what we are facing today, we get in the best practices as far as social distancing is concerned, as far as hygiene is concerned, as far as taking into account the member safety aspects are concerned. I think there's a lot that can be achieved from flexible spaces. Also, from an expansion perspective, I think the industry has grown exponentially in the past 3 years, right? Specifically in India. And it will be a sustained growth. There are multiple players in the market. It will be a period of reassessing as to what the growth plan should be as far as this business is also concerned. But having said that, in the market, I think a lot of transactions will be there for expansion. At WeWork, we are looking seriously into the management deal structure, wherein we bring in the landlords as partners with us, either by virtue of investment in capex or by virtue of just a hotel deal structuring kind of a scenario, where the upside goes to the owners as such, and we manage the space for them, and we take a management fee. So I also again some corporates might slow down on the growth aspects as such. So if such spaces are coming back into the market, we are more than happy to evaluate those spaces again in the management kind of a segment, because as I said, cash is king right now. Everybody needs to conserve money. Yeah, and
but at the same time, Arnav, when you say that we are going to follow the new normal in every industries, specifically for your industry, when we are talking about a new normal, the distancing, the physical distancing space amongst your co-working applicant or whatever you call them,
right,
would be more, So how will the cost part of it be to an individual post-COVID? So will there be an increase? We all are talking about economy, price reductions and everything in real estate. But in this particular case, how do you foresee that?
So in a normal case scenario, the standard space to one person for every. If you look at flexible spaces, majority of the flexible spaces have a lot of area dedicated to the communal spaces as such. So here your average density could go up to around 1:80, 1:90, where the space is constrained on is basically your workspace, because the intention is for people to be sitting in a comfortable environment wherever rather than their desk. And if they have some actual what we call meetings or some space where they want their own privacy kind of scenarios, they can go back to their desk. The average desk size is in a co-working space, standard co-working space is to the tune of around 4x2.
Yeah.
Now, if by what you're saying, Mr. Rao, in the sense like if each person requires more space, the same concept will hold good in a normal office space also. So there are corporates which earlier were looking at around 1:100 are now coming back to the market and evaluating scenarios where they're dedicating 1:120 or 1:162 in that range per person. So even for a standard office, the cost, there would be a implication on the cost, right?
Correct.
Let it be real estate, let it be interiors. So there would be a cost increase irrespective, because you're dedicating more space per person. In specifically in a WeWork scenario, you could dedicate 2 desks to one person depending on your requisite as such. And that will ascertain the standard social distancing norms per se. Now, the billing could be 2 desks to one person as such, which again, if you look at it from a standard office space, would the ratio would be the same, you know. And the advantage that you get here is because the spaces are truly modular in nature. So you're working with raised floors, your tables, though like modular, they're not fixed to the floor, you can move around. So for any requirement, you don't require too much time to reconfigure the space. So even in a standard office, if you want to reconfigure the space, it'll take you at least 30 days to 45 days to remove the workstations and build in those social distancing norms. Here, that's not the case. Here, you convert tables together and it becomes one workspace. Your networking needs to be brought in. You have raised flooring. You don't need to chip the floor. You bring it through the raised floor.
Just plug and play. Yep.
Yeah. So the time taken is lesser, and there again there are cost savings, right? Because there's no capex investment, and that could be into the end user.
Okay, Prasad, with Andrews.
Yes. Andrews, one question to you. The COVID has brought the trades and economy to a rest. In your views, which sectors will see the maximum impact?
Well, if we just know what we talk about, which is airlines.
Yeah. So basically, which segment, on a broader perspective, which sectors have been impacted the most, according to you?
Yeah, no, that's what I'm coming down to, which is why I'm going to say that property in the UK is probably going to be people's safest bet, because that will always bounce back and recover. Right. So, if you look at residential, that's taken a hit because no one can move at the moment. But what also what's taken a bit of a rise is sort of warehouse space in the UK, because people are looking to stockpile. So, if we look at the full sectors will recover in the next few weeks.
Oh, really? Okay. And in the real estate segment, which segments are doing well? Is the student accommodation, build to suit is doing well? The warehousing, residential, hotel industry. What do you think is doing well or is supposed to do well in the next few years?
Yeah, so it's funny. I was reading some articles about this before. The residential sector, there's people like Zoopla and Rightmove, etc. They're reporting a lot more demand in terms of their traffic to their sites. Now, whether that's people want to move house or want to move away from each other after being in lockdown for 6 or 7 weeks, we're yet to find out. So the residential and the rental market is definitely one that is going to be it's going to bounce back. There was a lot of talk about rents and negotiations in terms of the prices people want to pay. You know, I think that's just a natural aftershock of what we've been through and people looking at their budgets more. But more specifically, you asked around sort of PBSA, student accommodation, or hotels. No, they're our biggest sector as a business. And before this happened, hotels was our best performing asset class. Now, clearly, it's taken a bit of a shock, and hotels are closed. Our own hotels were opening up to key workers. So those aren't just the medical personnel and the front line, etc. We're talking people that are paid to repair the roads or infrastructure such as broadband. So we're opening our hotels up to those people so we can get corporate contracts in order to fill our hotels. So post this, and I don't know whether anyone subscribes to the Daily Telegraph, they reported last week that hotels and the staycation would be, you know, fueled in Britain's economy for the next sort of 5 years. So, you know, we're very optimistic as a business that our student accommodation, core business, and hotels will be very sustainable.
Okay, that's great. That's great to hear. And I'll move to Miss Jyoti. Jyoti, can you please unmute yourself?
Cheers.
Okay. Ms. Jyoti, in Dubai, what is your views on the current real estate market, and where do you see it going? Because a lot of rumors are there that Dubai has been going through a lot of doldrums, and this COVID has brought the whole the whole country to a standstill. So, what is your views on the real estate sector in Dubai?
Okay, so I think the COVID has brought everybody to a standstill, right?
Yeah,
so
I was about to say that.
It's all up to how much you want to absorb this and take it in your stride. You know, see, before COVID happened, right, before even March, the real estate market in Dubai was fairly below par. It has already been about, I mean, I don't have the numbers handy, but I would say hypothetically about a 30–40%. So we had abundance of supply, and there was abundance of constructions also happening parallelly. So I don't think COVID really had an impact in terms of whether you're talking about the prices of the real estate in Dubai or the UAE going down to its parent par value. I don't think those statistics are available, and even if they are, they must be really very misconstrued statistics. I still see the constructions happening. Yes, obviously it may not be happening at full steam, full engine, but construction is still happening out here. What is important to see, are they takers for these, right? So there are no takers at the moment. So while you still have the supply, well, still the prices are maybe marginally further depreciated from the pre-COVID. There are no takers. And for the takers, we need to have people coming into the countries. We need to have people coming back here. And for that, obviously, we need to have more transportations of people coming. Flights have to start flying in. So it will have a direct impact. So the people who are already here, the population or the real estate investors who already bought their real estates, it's there, it's leased out, it's standing empty. You still have rentals coming in, maybe at a marginal shared values. But is it going to have further impact? The real estate are going to have further impact post-COVID? I think it's very negligible. We haven't seen that. There are no numbers coming out. Dubai has not, earlier days, UAE or Dubai was dependent on real estate a lot, obviously. They were trying to use real estate to attract people from other countries, but not anymore, because they're also posting themselves as a country where besides real estate, you could actually start establishing a business. You could have a relocation plan. You could use UAE as your second home. there is tourism, there is trading activities, financial services activities. There's so many other things. So I don't think.
As an advisor, what would you advise your clientele for this particular asset class?
Just again, this particular asset class, I wouldn't say you need to look at just UAE. I would say real estate must be either through a physical format, a tangible, or through a REITs. It has to have an allocation. Definitely. I mean, there's no, because every private client, so we deal with private clients, right? Every private clients has a real estate component in their livelihood. It could either be through a lease, could they're living in, or they could just have a portfolio, you know. We have clients who just have probably 80% of the portfolios just in real estates.
Oh.
Because they're so, I won't say bullish, they're very emotional about it, right? It's also about emotional things. So you could have a portfolio where you would just see that a lease rental income coming out of that space, right? They don't believe in growing, they believe in cash flows.
Cash flows,
okay. Looking at it.
Yeah, we see Swapnil. Swapnil, welcome back.
Hi, I think I had a real bad, technological failure.
So this is how COVID is going to also affect our businesses when we don't have a proper infrastructure in place, and we talk about work from home. So that's where Arnav takes, I think, an advantage, gets an advantage over it. Well, Swapnil, we have finished with ma'am now on her second question, 7th. So you can take it forward with the 8th one, with Sharad.
Sure. So having said that, I literally had no time. So that brings me back to this. Real estate guys are the most resilient guys, and hence I think whatever be the situation, I think we will always come back hard.
Yes.
So thank you, Ajit. Thank you, Ajit, to take it there from Food. Okay, so I think coming back to the 8th question, we'll go to Sharad Bhai. Sharad sir.
Hi, Swapnil.
Hi, Sharad sir. So IndoSpace has been a pioneer, and they have also been the market leaders in this space of warehousing, right, for a very long time now. So how's been your journey? If you could just tell us, from where you identified this space, how did you identify this space, and you actually ventured into this? So if you could just give us a brief background about it.
Sure. So we've been in the market now for 12 years in India. IndoSpace was a joint venture between Everstone, which is the largest India-focused private equity fund, and Realterm Global, which is a North American fund. And to really answer your question in short, our founder, Brian Oravec, basically walked the length and breadth of India for a period of 2 years to understand what is the appetite for organized grade A warehousing and industrial facilities. And if you look back in those days, India only had your typical go downs or your leaky sheds. They were not health and safety compliant at all. And there was no offering of any grade A space. So at a time from kind of 2005 onwards, you saw a tremendous push from private equity institutional capital like ourselves, and I was previously at Citi at the time in India. The favor of the month was hotels, it was IT, ITES, or it was residential. No one really thought that warehousing, given where infrastructure or the story of infrastructure was at that time, it wasn't at the forefront of people's imaginations. And I think Everstone and Realterm with IndoSpace felt that this was a huge opportunity to tap into a significantly untapped demand profile. And when we came into the market, we raised a small fund of $240 million in 2008, and which would enable us to build 10 million square feet. And that was really in your core established locations, such as Chakan in Pune, Chennai, Oragadam, and in the NCR and Lahari, for that matter. You know, we built that out. We got some traction. We partnered with multinational customers like DHL and built them 1 million square feet across India. And then we realized that we needed to double down on those core markets. And so there was a big opportunity. People were looking, or gradually looking, to consolidate into more space. And we ended up launching a second fund of 340 million in 2013. Our fast track to today, we're now another 580 million invested. We've tapped into certain new markets. And I know that's one of your questions in a while, about what are the new growth corridors, which I'll come into in a bit more detail. But I think for our perspective, when you compare warehousing and its offering compared to some of the other countries like China, Japan, the UK, we're still a minute amount of overall supply in comparison to the rest of the mature markets.
When you identify this space, were there many players in this industry, or you were the first organized player, I'm sure?
We were.
Was this market a little fragmented, and there were small domestic players operating out of this market?
It was, and if you look at it across the entire universe of warehousing or industrial space in India, it's still not, it's not significantly different. I think what you've got, we were the first institutional, I would say, developer that came in and started building, you know, larger facilities. What we did bring to the table was more of an organized park feel. So a tenant that, you know, we moved away from your standalone units, which maybe a local developer would have built on family aggregated land historically, and that was your typical market at that point. For us, we would rather build 8-9 units in a park, have a, you know, make it a much more institutional and what you would see in the US, for example, where you have a lot of common amenities that are there, and these are in highly accessible locations. And the tenant no longer is by themselves; they're part of more of a community, similar as you'd find in an office. So, at that time, there was no other institutional player in the market, and that therein lied the opportunity for IndoSpace. I think as you fast forward to today, obviously, I think on the back of our success, there's been a number of institutional joint ventures that have been announced and now developing out, which is good for the market. It's good for competition. But I think also local developers have got better, which is a good sign for this sector as a whole. I think I've lost you, Swapnil.
Swapnil. What happened again?
He wasn't frozen by my answer.
Frozen. He's frozen. Hello. Swapnil, are you there? Okay. Okay. Going by what Sharad said, Arnav, we would like to know, I mean, we have already asked this question actually. I mean, we have already known the manifold growth in the segment for grade A offices, what you have just explained some time back. Do you think post-COVID, the growth will be similar, or how do you see that?
So I think the demand for office space might slow down a bit. And as I said, many people may want to reassess the impact of the situation and the growth plans and reassess their positions, There will be a new style of work emerging for sure. We don't know what it is. A lot has to do with, as I said, there's no antidote to it. There's no vaccine to it. We have to work around the pandemic and see how we have to change our lifestyles to because we can't be locked out and locked in homes. The economy will not be able to survive that way. I think the demand for flexible space from a absorption perspective for the end user will increase because it gives you that flexibility of operation. It gives you the flexibility to operate out of any location which is convenient to you. There's this talk about work from home for from offices as such. They're assessing those aspects. But like if I just take WeWork in India as an example and Bangalore as a city, we have 12 buildings and we are based out of different locations. So depending on which employees staying in which region of the city, they can utilize that particular WeWork and yet be connected. And the usage also can be dynamic, right? So it does not mean that one desk is dedicated to one person itself. So if it's a company, they can dedicate one team per week kind of a scenario to operate out of that particular space. So that flexibility comes in. So I think that there will be a huge upsurge there for sure. And as far as my company is concerned, we are committed to growth in the Indian market. We absolutely believe in this business model and we think it has a bright future. But it will be a more sustained growth. It will be a growth which is keeping our members' priorities as the first priority. It will be a member-first approach. And again, as the other panelists have also mentioned, post-COVID, for us, health, safety, hygiene, efficiency to run the business from that particular building will be paramount.
Okay. Andrew, you being an expert in student accommodation, what do you foresee in this particular sector?
What,
student accommodation.
Well, what you're going to find is it's a hugely the PBSA sector in the UK has always been a hugely popular for us, and that's just not us as a business, but also as a community. International students always want to be attracted to the UK because of our top tier Russell Group universities. We boast some of the best universities in the world, so this will always guarantee a future for people.
This particular segment has not taken off in India.
On hold because of the construction side, but
sorry, continue.
What in terms of Indian investment or Indian built?
Yeah, this particular sector in India has not taken off. And what do you see the potential? Because normally we talk about co-living spaces and normally accommodations for these, the migrant ITs, job seekers, which are BPOC, they all going for PG accommodation. This particular thing of co-living, independent co-living structures for student accommodation and these kinds of sectors. How do you see the potential of investments in India?
So I missed the first part of the question, the connection wasn't there, but are you talking about investment from India into the UK in the student sector?
Into India for this particular sector, which is not yet, which is still in its infancy?
Well, it would depend on what your traditional student accommodation would look like in India. So we know that from the traditional old style student digs of shared accommodation is becoming a thing of the past in the UK. So if you follow that model, then the purpose-built sort of 500 unit blocks could become the norm. And then if you're ahead of the trend on that, then you could have, we contextualize it over here that, you know, a student in the UK wants the nice new shiny thing. So they're not going to want, for the same money, they're not going to want to share some terrace property with 5 other people. They're going to want high-speed internet. They're going to want security. They're going to want to lock their bike away securely. They're going to want public access, the public transport, for example. So if you've got the infrastructure around the accommodation in India, then there is no reason why the students wouldn't migrate over to the new style purpose-built ones.
Okay, thank you. Prasad, would you like to take the next one?
Ms. Jyoti, you are an established wealth and asset management company, managing assets for multifamily offices, ultra HNI institution and pension funds. What would be your approach broadly towards investment of these funds now?
I'm going to also request here Prasad for one of my colleagues here, Kshitij. Yeah, he's there.
Yeah.
Hi, everyone.
Hi, so Kshitij is our investment analyst. He's part of the investment team. He's been with us for 3+ years. So he'll also join up. So typically,
Welcome, I'm sorry we couldn't, we didn't have your.
No problem.
No, no.
It was a last minute addition, so it's no worries.
Sorry, last minute. Okay.
I think it was important to have him because the value that Kshitij and his team brings together into what we do for our clients, because asset allocation is quite sensible and very humongous, and it's very dynamic. So it was very important that we have him here.
Fantastic.
Fantastic.
First and foremost, our clienteles are across geographies or across various class. So obviously, we've got pension funds, institutions, private high net worth clients, families, single family offices. So every client has different requirements. Ultra high net worth. And again, you have definitions there also. You have you have an HNI, you have the ultra high net worth, and obviously, and each has a threshold in terms of classification and qualification. It goes without saying that every investor that we engage with have to be sophisticated and professional. Yeah. So basic knowledge is a must. But when we onboard these clients, right, so obviously there are different requirements. So like I said earlier, you could have some clients which is a growth requirement, cash flow or income based. So, and some clients would just gonna asset classes which is completely skewed towards real estate or something. So when we approach a client, my job to run when I'm part of this organization, my job first and foremost, when we have a client, we go with a very right. So for us, we don't see the client as an individual or institution. So we go to blank canvas, and then we basically look at what the requirements are first, right? So once we nail down the requirements, then we go into looking at the risk appetites. We go looking into allocations. We go looking into geographies. We go into into currencies. Do they want to take currency risks? For example, if it's an Indian client, does he want everything to going back to India? If he's a Turkish client, does he want to have % of his allocation only into Turkey because he's very, very emotional about his country? So we could have various aspects. So then when we have such kind of mindset of clients, then for us as an institution, they come with a very unbiased opinion. We tell the client that, listen, you know what? You already have so much of your assets in your home countries. Do you still really want to skew your entire thing of your portfolios there? So we become very unbiased, right? So once we have nailed down all these requirements, we put this in a little pot. So it's my job and my sales team's jobs to come back to the office, and then we feed this data information to Kshitij and team. Once we feed that information, then they go into extrapolating and putting the numbers, putting the allocation there, So I'm going to pass this on. And once I've told, like for example, I tell Kshitij and team that, listen, you know what, we have a client, we met a client today, moderate risk. He's a dollar-based client. He doesn't want to take currency risk. He wants to have pure cash flow generation, and yet he wants 100% liquidity into his portfolio. What can we do for him? So then we give it to Kshitij and team, and then they come back in a span of a couple of hours or days. They come back with a portfolio, etc. So, I mean, hypothetically, if I had to give this kind of a scenario to Kshitij today, he would just give you ballpark. Kshitij.
Yeah, so for example, as Jyoti was saying, we have bespoke policy statements that we generate depending on client risk and time horizon parameters. For example, if Jyoti came to me today and said that, okay, I have a client who's been in the real estate sector as a profession, and he would like to, get in to a bit of the fixed income and equity market. So, for example, what would I do for such a client? The first question I would ask is, what is his time horizon? Say his time horizon is 5 to 7 years or 3 to 5 years. Is he a short term? Is he a medium term? Or is he a long term investor? Then I would go into the the liquidity aspect that Jyoti was talking about. For example, does this client need cash flows from his portfolio that he's invested with us as a steady source of income, or is he okay to reinvest the cash flows back into the market for the portfolio we are managing for him? After this, we would basically talk to him about, okay, what geographies and what sectors are you comfortable with? Okay, are you comfortable with North America? Are you comfortable with European segment? Are you comfortable with Pan-Asia? Are you comfortable with India? For example, there are a lot of Indian bonds that are being issued by these public service utility PSUs like your REC, ONGC, Oil India. We're quite comfortable with holding such names, especially when they have their US dollar bond issuances. So basically not taking much currency risk and, sort of hedging our forward INR USD, as we believe that US dollar is the currency, the strongest currency at the moment to be in, given the vast swathes of fiscal and monetary stimulus that the Fed and the Treasury has come out with. So then we would go into, for example, how old is the client? For example, the older the client, the more his assets we would prefer to have in a fixed income allocation. Or if his business is related more to the real estate and equity market, which is cyclical and related to the economy as a whole, then we would not want to have a high correlation of his portfolio to his daily livelihood. So again, we would go into safe investment grade issuances or highly liquid treasuries, or government-backed, government-issued notes. For example, even in the real estate sector, we have seen a lot in this segment. For example, we see the developers like Emaar and Mubadala issuing bonds recently for raising capital. And these are highly investment-grade, government-backed securities. So we'd be more than comfortable, diversifying the allocation to the real estate through the fixed income space. Also, we're seeing a lot of demand for REITs. Just recently, we bought a large share in Digital Realty Trust, which is a data center REIT. Now, given the work from home and COVID scenarios, we do see a demand for data center REITs increasing. So we bought this stock as one of our equity allocations. So these are the kind of opportunities we are seeing in the market, even if someone does want to invest in the real estate background.
Great, Kshitij. Kshitij, see, now post-COVID, what are the tools that you use, and what are your risk profiling, short-term, long-term goal identification, and investment models that you'll be using now?
So we mainly rely on fundamental models. We are not into technical analysis as such. We do a bottom-up approach. We look at the company's balance sheet. We see whether they have enough cash to reinvest to weather the storm. So we don't like companies which are heavily reliant on debt or creditor funding at the moment. So in general, we follow a bottom-up fundamental approach. Now, again, coming back to your question of risk profiling, for example, if you say that, okay, I'm okay with short-term fluctuations in the market, but because I'm a long-term investor. So I would say, okay, then depending on your time horizon, which is long-term, you can take a bit of equity risk, because there might be volatility in the next 12 to 18 months, but in the long run, we feel that COVID situation will be resolved. There will be a vaccine developed, and the equity markets currently are at a cheaper valuation to get into. However, if you tell me no, Kshitij, I don't want any mark-to-market valuation in my portfolio. I want stable cash flow. I don't want, for example, if it's a levered portfolio, I don't want margin calls from the banks or the custodians. Then I would say, okay, if you can't take the short-term volatility, given the current scenario, then I would still recommend to go into debt instruments, fixed income, even REITs or bonds that are being issued by REIT companies, which have steady cash flow, which do not move as in a volatile way like the stock market would move. Also, something that has government backing, as I was saying, we really like the Indian PSUs, which have come out with dollar-denominated bonds recently in the market with decent yields for 3 to 7 year time horizon. So that's basically, in a nutshell, what we would look at.
So what's the ROI one should look at in such kind of
Given the current interest rate scenario for the US dollar, we would recommend any ROI above 7 to 8% in US dollar terms with a 5-year time horizon, a quite lucrative or enticing opportunity. Of course, for INR rates are higher, so we would look anywhere between 14 to 17% in INR terms. That being said, our focus is more on US dollar denominated instruments. We also do a bit of GBP, Great British Pound. We've been running pension fund portfolios which are generating 4% in GBP terms with minimal credit risk. So it's highly investment grade, short term, less than 4-year average duration. So that's basically what.
Swapnil, are you back again? Okay, Kshitij, you're lucky, stay on the screen. So, Swapnil, you can take it forward.
That was very insightful of you, and we know precisely.
Oh, you're low on volume. Increase your volume.
Okay, is it okay now?
No.
Okay, is it better? Is it any better?
A little better, could be more better. Increase.
I don't know.
Yes.
Is it okay now?
Yeah, kind of.
Hello?
Yeah, it's okay.
Slightly better, yeah.
Sure. Kshitij, thanks. That was very insightful, and we know for sure that if real estate, we are getting
It's the volume is still very low, Swapnil. Little louder, please.
Yeah. Is it any better now?
Yeah, it's better.
Okay, sure. So I just want to thank you. It was very insightful. Now that we know our HNI clients, if they're not keen to buy in real estate, what other products we have to offer them.
Yeah, definitely.
So coming back to warehousing, can I go to Sharad? Sharad, sir.
Yeah, hi, Swapnil.
Hi, sir. So we just wanted to check, this is really an upcoming sector in real estate as an asset class. And with increasing demand and a lot of e-commerce happening, this warehousing demand is going, north from here. There are a lot of health product, groceries, FMCGs, e-commerce. So what kind of demand do you see post-COVID for this kind of segment?
Sure. So I think, look, as a whole, we feel that there's going to be near-term disruption. And I don't think any sector in particular is going to be shielded from that. When you look at where we were maybe 3 to 6 months ago, we had already seen the rise of e-commerce and significant uptake in requirements across India from e-commerce driven companies. And I think COVID has just maybe catapulted that to a certain degree. So we certainly do see that out of all the subsectors within both industrial and in the warehousing category, I think e-commerce clearly by default, given that it's based largely on the consumption requirements. One critical factor that you see now today, you've brought in a whole new customer that relies on online spending and grocery or online grocery ordering. So my parents' generation, for example, would never have even dreamed of ordering stuff online from Amazon to get their groceries, delivered home. And so you've tapped into a significantly larger segment of the market. So I think as a direct result of that, e-commerce is seeing, a significant uptake. I think that, overall, you would probably find that it's more third-party logistics and e-commerce as opposed to the retail segment. Again, consumer discretionary spending is not there anymore. So we're certainly envisaging, a tough 12 to 18 months on the pure out-and-out retail side of it, and subsequently from the customers that are in our portfolio. But look, the key fundamentals for us, and we believe, are not going to change. And then the fundamentals that tenants across each of the sectors are going to require fully compliant space. They need it well located, in top locations. It needs to be grade A. So that is not going to really change. I think that's matured over the last 10 years. And I think multinational businesses, the number of them we can mention, they're not going to compromise on those core fundamentals of those requirements. But I think more importantly, to answer the question, if there's one sector, I think e-commerce will continue to drive it. We're seeing that play out in the West, in more mature markets, and I think India won't be any different to that.
Sure. And also, I just wanted to ask you, post-COVID, there could be some design changes and behavioral changes that you guys will have to adopt, right, to maintain the hygiene standards and to make the environment safe for employees and also the stock, which is involved. So, any plans for that? You being the industry leader, you know, people would want to take cues from you.
Sure. I think I actually kind of hinted on this on one of the earlier questions in terms of certain measures that you know, we as a firm have taken to address the health and safety. You know, again, I mentioned earlier on that we manage the common amenities, the entry into the park, the exit, to ensure that any tenant that we have operate within a safe and working environment. So we've adopted multiple measures, whether it's, you know, sanitization, you know, a truck driver coming in, an employee coming in of one of the customers is temperature checked. You know, we are ensuring that there is strict SOP implementation, not only across our parks that we operate, but within the tenants, how they operate within their premises, to make sure there's no contradiction between their procedures and our procedures that govern the access to the park. You know, providing parademics on site, I think that's critical. Quarantine facilities. So that addresses really what we're doing from a park perspective. But in terms of design perspectives, I think it's a very interesting question. And you know, whilst I don't think any other developer would be thinking differently. I think that there's clearly a push to explore certain structural changes to buildings that maybe down the line be able to accommodate automation. I think there'll be a heavy investment in automation in the long term. We were already moving towards that, a potential investment into robotics. You know, there are in other countries drones operating from warehouses delivering to the end user. You may see tenants operating that much more frequently. So I think, you know, and then also with the human element, how these buildings can accommodate social distancing. I'm not sure the structure necessarily will change to accommodate that. That's really how the space efficiency is designed within the building. But I think there's a lot of new concepts that are forcing developers like ourselves to explore, and we're certainly not close to them. So it's something that's at the forefront of our minds, and now we are actively exploring each one of these.
So I would like to throw the same question, and I think it's also very critical to the co-working space industry. So Arnav, if you could just answer this, you know, what are the structural design changes and behavioral changes that you will also have to incorporate in workspaces post-COVID to make it a fit place to work? Have you set any guidelines for reopening post-COVID? And what will be the Yeah, sorry. And also, I just wanted to check what will be the impact of design efficiency on the revenue cash flow of you know, the company.
I think Ajit sir asked me the similar question earlier also. So we have the same parameters in place as far as safety of members is concerned. I honestly, from a space utilization perspective, I think companies will reduce dependence on utilization of the actual office space and consider more like flexible areas and open areas and community areas. And in the community areas, what we've done is we've ensured that 6 feet distance norm is being maintained. So either the placement of chairs are 6 feet apart, or if we have chairs in between, we've clearly indicated that those chairs, by virtue of stickers and all that, saying that not to be used. So we'll be taking all those considerations into account from a layout perspective. And as I said to Mr. Rao's question earlier also, we can control the community areas and the common areas as such from a space utilization perspective. What the individual companies want internally within their own private spaces, we leave it to their best judgment and help them in terms of reorganizing the space in accordance to their requirement, and also guide them as to what are the norms as such, and ensure that they're following it to the T. From a design perspective, as I said earlier, the space is very modular in nature. We have the modular workstations, but they're not fixed as such, so they can be programmed any which ways in a matter of seconds, right? Floors are raised floors, so your cables can be terminated wherever you want, and in terms of your placement of your desks and your chairs. So again, we are re-evaluating the use of technology, so touchless technology, artificial intelligence. These are things that we are looking at, but it's early weather right now because it will have a commercial impact again. It will have a capex dependency. It will have a dependency on the investment that we need to put in. But in the meantime, screening is happening, thermal checking of members is happening. All the members that are working out of our workspaces have to declare any travel histories. So all those parameters are being taken into account. All your deliveries, let it be your courier services or your food services, we are not allowing them inside the office premises per se. We're having a counter outside, closer to the gate. Our security guards and our CSAs are being sanitized before they come in for work. During they have certain time frames, and then the shift changes. Use of gloves, caps, and face masks, all that is mandatory within the office space. We stopped using the office, the common cutlery and crockery, as well as glasses. We are pushing members to get their own crockery and cutlery and use it for their own usage, kind of a scenario. So these are small steps that are being taken in terms of the way we operate to ensure that there is the member safety is paramount.
It sounds quite interesting because having heard you, people really not mind going back to the workplaces and start using them if all the safety standards are maintained. But having said that, are there going to be impacts on your revenue cash flows, because then you will have to kind of shrink, or probably put more space for fewer number of people? So
Swapnil, he has already answered that.
Oh, you have. I am so sorry.
So you can continue.
But I would still want to stick with Arnav sir to ask him. As realtors, we are facing a lot of queries from already existing tenants, and there's been a huge tussle between the landlords and the tenants, given this lockdown period of extension and going more than 2.5 months. So, are you guys having a similar negotiations from your occupants to you, and are you also negotiating with your landlords subsequently to kind of factor in?
So as I said first, we as a company, for us, our employees and our members come first, right? So there are members who are, and rightly so, these are unprecedented times, and wherever we can support them, we are supporting them. Wherever we're trying to revisit the contracts and seeing how we can accommodate that. And it's the same kind of if you ask me personally, I feel this segment is a hybrid between hospitality, retail, and commercial, right? It's just that we use commercial space, but we run these spaces as hospitality, and our revenues are like retail. I without members, I don't make revenue. So I'm a mixture of all. So if retailers can get a rebate, I think we should also from landlords.
I'm sure, because the extension of the lockdown means that we might not get back to work for another month or so. So which will take a huge pounding on the revenue and the cash flows. So,
but honestly, Swapnil,
are landlords appreciating this?
See, Bangalore's opened up, so has Gurgaon, so has Noida. we are working in under norms of that 33% occupancy as such, and the members are also coming to the building slowly. They're not coming, like they are a little bit apprehensive as such. Other than Mumbai and Pune, all the other buildings, even Hyderabad, we opened up yesterday. So this is as per the government norms.
Sure.
And 33% members occupancy can be there. So it works out just well for us because majority of our buildings are like at an occupancy of 80-85% as it is, and it's a slightly denser this thing. So members can utilize the space. But yes, to your other question, there has been support from the landlords, to be honest. Yes, a lot of landlords have come across and they worked out a win-win situation. It's not just that we're just looking for rent waivers, where we can help them by increasing our lock-ins, where we can help them by seeing it. It has to be a win-win situation for both, right? So, and that's how it is a partnership. So we also need to consider it from a landlord perspective. But majority of the landlords have been appreciative of our requests and are helping us out in this time frame.
Okay, that's fantastic, because if there is consideration and people are being fair to each other, we will all move on together.
Yeah, everybody has to look at it from a long perspective, So short-term gains, if we are just looking at 30 days, 45 days, it doesn't help anybody. We have leases of 10 years, 15 years, 20 years with landlords. So we are looking at the whole duration.
Sure, sir.
A quick question: how long is this this webinar? Let me ask.
Yeah, it's another half an hour now. Yeah, we are just 30 minutes. We have just 30 minutes to go. Hello.
Yeah.
Yeah, did I answer?
Swapnil, you need to be fast.
Yes.
Yeah.
Sure.
Nowadays, webinars
now
are getting more
Andrew.
boring than anything else.
Hi, Andrew.
Please.
Hi, Andrew.
Hi.
Yeah, hi. Andrew, resilience continues to define UK economy, even as the political and the global environment remains challenging there. But subsiding Brexit, uncertainty will foster, and recovery of the business will be soon and very fast. So what segments in UK do you think, in real estate specifically, I'm asking, what segments in UK do you feel, the investments are going to pick up? Residential, commercial, or hospitality, or buy-to-let kind of structures?
I talked about earlier, I think the residential and
it's already done.
The rent one will recover, and I think the leisure and hospitality, you'll see a massive surge from kind of July, August, when social distancing and rules are surrounding that will come into place. I think what you'll also find is that commercial, talking to your WeWork colleague there, I think the Barclays CEO mentioned that working with 7,000 people in offices will become a thing of the past, and working from home. So the commercial aspect in terms of the UK certainly is going to change for a lot of people. So my top tips will be hospitality, leisure, student, and care homes as well. So care homes has been quite prominent in the news as well. So a lot of investment will be going into care homes from the government. So you've got a lot of core sectors that will provide fixed income returns for investors. I mean, just to give you some example, our ROI can range from 8% to 10%, and some offers a facility of a buyback as well, which is built into the contract. So investors can get 110 to 120%, depending on the duration they will want to be tied into the contract. So there's massive scope and massive opportunity for the investor.
Oh.
You're on mute.
Unmute.
Yeah, sorry. Do you see the segments delivering similar returns going forward also, Andrew?
I believe so. I mean, I had a chat with my bosses, during this whole process, and we can't see any reason why, we can't carry on offering the same returns of 10%. The reality is we're going through a global blip, and we're coming through it as a global community. Yes, things will change, and we've talked very much a lot today about adapting to that change. But and certainly the sectors that we look after, they're very consistent. We look after the care homes, student, and hospitality. Those are very core businesses to what we offer. So we don't see too much changes in terms of that, core returns. We say very much as actually staying the same. Yes, we've got to get through these next couple of months, but after that, it will generally go back to a business as usual.
Okay, and what are the growth corridors in UK? So if you could specifically tell us, which are the corridors which are upcoming, and where people are, investments is worth considering. Which micro market specifically? And for what?
Yeah, you're looking at the northwest. So Liverpool is up and coming. It's probably about 5 years behind where Manchester was. So you remember the Salford City, the media city. Then you're looking at the East Midlands, London, of course, and Wales is also a big growth area, getting investment from either Crossrail in London. You've got HS2, which is still going ahead. That was given another go ahead 2 weeks ago. And you've also got a massive investment in terms of science investment and infrastructure. So particularly parts of Wales getting hundreds of millions of pounds spent in terms of their science park. So these areas are not only great for university towns, but they're great for future economy of employment.
Okay, sounds good. Thanks, Andrew, for that update. I will move on quickly to Sharad Bhai.
Hi, sir.
Hi, sir. So similar question, so in your segment, sir, what are the growth corridors which are there in India? So you are one of the largest industrial warehousing developer, right? And I'm sure you have a huge growth plan going forward. So what are the growth corridors and the micro markets that you are looking at in Indian market, which will drive the next big wave in this segment?
Sure. So I think we have a portfolio of just under 40 million square feet today. So that's across all of our funds. So we're in 11 different markets, pan-India, already today, which is now fully operational. So I think that there's a firm belief within the business, and when we look at our investment strategy going forward, that your tier one cities, and I mentioned them earlier on, but Pune, Mumbai, NCR, Chennai, and Chakan in particular in Pune, Oragadam in particular in Chennai. I think these are the key markets that are going to really see the most significant demand and demand. What you've seen is much more of a push from a demand perspective in markets such as Bangalore, where we also have presence, and we're continuously looking for more land opportunities to develop there, both on the warehousing side and the industrial side. I think the newer markets, and I say newer in the sense that there's less grade A institutional space that's been put out there. But so Calcutta is a market that we've been looking at for a significant period of time, and have a number of deals that we're about to close in Calcutta in particular. And Gujarat, we've been in the market for 2 years and continuously looking at expansion space. But I think that really, there may be the one exception of Hyderabad. And ironically, those three cities that I've just mentioned are arguably three of the most difficult places in the country to procure land. And just in terms of the process and time it takes, in order to get a clear land title, I think but we're looking outside those markets. I think right now, for the foreseeable future, we probably won't go. Long term, there's a lot of noise about tier two and a tier two strategy. I think that you may see a lot of local developers that try and capitalize on that. From our perspective, as a larger institution that typically builds 1 million square feet park plus in every location, the question is the tier two strategy scalable? We're not going to venture into a smaller town and build a 50,000 square feet unit because it's not scalable as an opportunity for me. So unless I can get to 500,000 square feet or 1 million square feet of demand in a tier two city or a tier three city, it doesn't make much sense. But having said that, I think we're going to get there. I just think it's a bit, further down the line.
And so you spoke about demand. So how do you assess this demand when you basically go out in the market?
Sure. So, I mean, the demand comes predominantly from within. I think from our perspective, we have a network effect. So we're part of, GLP. GLP is the largest developer in the world in this specific sector. So I think the benefit of having a 600 million square feet portfolio is that you leverage on the network effect that you're able to create from that. So demand typically comes from our own experience, our own tenant customer base that we have. And we spend a lot of time in doing a deep dive with each one of our customers as to what their expansion markets, where do they want to be, what is their timeline to get there, what is the typical space that they require, and really offer an end-to-end solution for them. And then on the other side, obviously, we rely heavily on the IPC and the local broker network in terms of bringing certain opportunities to us. So the demand side, for us, it's great reading a research report from a JLL or a Savills. I would place some more reliance on that in the West. I think for us, we control a significant share of the market as an organization. So we like to think that we know typically where the demand centers are going to be and what are the key demand drivers, more importantly. So that's really from the demand side. But, moving into a new market is a very different strategy. I think doubling down on an existing market is something that's relatively easy to do. You have resources on the ground, you are familiar with the approvals process, the land procurement process. So I think that is much of an easier strategy to adopt. Going into new markets like a Calcutta, like a Gujarat takes time. There's an element of trust to it as to maybe whoever you're partnering with, if you're using a local JV partner for that matter. Which is something that we typically do in newer markets when we haven't got our foot in the door to start off with.
So Swapnil, here lies a lot of opportunity for realtors out here.
I think Sharad bhai, we have a lot of realtors here, more than 1,000 participants today who are listening to you, and I'm sure they are all itching to go and do land acquisitions and demand assessment for you.
We welcome that.
Okay.
So my next question goes to Arnav sir. Arnav sir, with overall economy getting subdued and a lot of companies, employees getting into this habit of work from home, is office space being considered as an additional overhead cost, which many are not willing to invest today? So, or I would rather say at least for next 2-3 quarters, if not very long. So what is your view on this, sir?
So I think new styles of working will emerge. Like I was mentioning earlier, something in line of rostered work shifts and timing, operators being more relying more on technology as such. Business continuity is paramount, but so is your employee satisfaction as well as morale, right? And as I said earlier, we can be locked up for a certain duration of time, but we need to come out and we need to interact with other people, and there needs to be a flow of ideas as such, and interactions like Zoom calls and webinars are great for a certain duration, but then you miss the personal connect and you miss like meeting people in person, right? And
Absolutely.
The euphoria that you get out of that is different. So as I said, there will be a few changes in the way we operate for sure, but I think the usage of office space will remain. Also, what will also happen is a majority of the companies would not want to actually invest in fixed assets like interiors, let it be even outsourced manpower as such, or support manpower, and they would much rather outsource it to professionals who actually know that job and utilize those services. So it'll more or less become an asset-light kind of a approach. Third, one thing that we are realizing, flexibility is the key. how soon you can shut down operations, how soon you can start operations, safety of your employees, very, very important. So these are the aspects that I think each and every corporate would be looking at it from the way they operate their businesses. I was talking to a few CREs last week, and they were of the same opinion. When they cannot predict growth, they won't get the budgets. When they cannot get the budgets, they will not be able to look at internal growth per se. And again, companies have to be agile, and they have to be agile in terms of growth, in terms of even reduction. For like when you're going into a lease, you're getting locked in for a certain duration of time. Your employees are shifting bases from different locations to be closer to the office, maybe. You're getting into transport facilities for those employees. So although that becomes like pretty standard way of and fixed way of operating, and which people I think will look away from. Also, I think small businesses require a little bit of resource coordination and all that. So they will want to operate from offices, and they would want to operate from places where there's some scope of interaction with other partners as such. So I don't think that office space requirement will reduce, but it will be more structured, and it will be a different way approach.
I completely second your thought, actually. Because we are all social animals, right? So we need to interact physically in person, and not more like the Zoom calls that we do regularly. So having said that, in such testing times, we all have realized that we need to have a business model. Now, which business model do shared space providers work on currently, and which model, according to you, is more sustainable and effective in such kind of scenarios? Is it the lease back model, or
So as I said, like I represent WeWork, so I'll always push for co-working space and flexible office space as such. But I think the way the things are right now, that idea is becoming stronger and stronger. To be honest, when we came into India 3 years ago, a lot of people did not understand the flexible office space segment by itself. Either we were mistaken as business centers, or we were mistaken as managed offices. But during this phase, I think people have understood what the positives of this model, and how this model is different from the others in the same segment, perceived segment as such. And it's a space as a service platform, right? So it reduces the complexities of leasing real estate, of basically furnishing space. It's a membership model. As I said, it's flexible. You can take up space anytime, and you can release space anytime that you want. So that agility in your real estate comes into play. So tomorrow you're getting let's say an outsourced contract, you can add seats. Tomorrow you're losing some contracts, you can reduce seats. So that flexibility is there with minimal security deposit, with minimal lock-ins, with no investment. So I think that's the way forward, honestly.
Swapnil, sorry to interrupt. Swapnil.
Yeah, sorry.
Okay. I think we should take the closing note from Jyoti ma'am with the wisdom and the expertise and experience what she carries for our industry. And because we have a lot of Q&A which we cannot anyway take, which will forward to the respective speakers if they can oblige us with the answers for the members over a period of time, then it would be great.
I think we still have time, so I will definitely go to Jyoti ma'am. Yeah,
hunger pangs are there.
I'm sure, but she'll appreciate. A lot of people actually, are keen to listen to her. So I'll just go to Jyoti ma'am now, and maybe if Jyoti ma'am is keen, then maybe ma'am, if you want to leave, we will end it after your questions.
No, I'm fine. Please go ahead. I mean,
yeah, ma'am, because I think we started a little late, and because of the technical glitches, we have missed out.
Like I said,
so I really appreciate if you can just be with us for a little.
Right. So
sure, ma'am. I just wanted to come back to Jyoti ma'am and ask, with this steep depreciation in rupee against dollar now, do you think Indian markets would emerge as preferred investment destination for global investors? And what measures you think that government or this sector specific, they should take to enhance this opportunity?
Okay. I think somebody has to go on mute. There is a lot of echo at the back.
Yes.
I don't know who it is. But I think, Swapnil, that question I'm going to ask him to answer because he handles a lot on the FX. And which is very funny you're asking this question right now because we just had a call with one of the investment banks in the morning today, a very similar term of the INR dollar scenarios, and it was something that we didn't even know you're going to ask this question, so it's just something that came out. And but I think Shikha had some very brilliant understanding of it. I'm going to leave that for him to answer.
Yeah, sure. So basically, regarding the INR depreciating against the dollar, I feel that overall emerging market economies, whether you take Brazil, Turkey, South Africa, India, if you look at the long-term chart for US dollar versus a basket of these currencies, the US dollar has been appreciating, even though there have been maybe a few periods where it has dipped. But over the long run, I feel that currencies like the US dollar and the euro, which have the fiscal and economic stimulus, especially now post the COVID era, that the governments can sort of infuse money. Basically, they're just printing money and infusing liquidity into the economy. I feel that euro, dollar, and GBP are the three strongest currencies over the next 3 to 5 years that you will see moving in an upward trend. What India needs to do, well, honestly, I think the government needs to come up with more fiscal stimulus for small and medium businesses, like the US did for the Small Business Administration program, the PPP program, wherein if you have if you're not a public company and you have a staff of less than say 150 or 100 people, to sort of inject liquidity and give them small grants or really near-term cheap funding loans to help them promote their business. So until the government gives fiscal stimulus to the common man, the small and medium enterprise in India, which is basically your brick and mortar retailers, I don't think as an investment destination, India would be as attractive, say, compared to a China now or a US. But that being said, we do have a lot of faith in the Indian consumer, as it's the consumer that makes up a large chunk of the Indian GDP. So as long as there is demand from the Indian consumer, as long as the aam admi, as I say, the common man, brings back his demand for these goods and services that he was consuming pre-COVID, 3 to 5 years, India will be back on track for its GDP growth, and also the INR, I feel, will stabilize. But in the short term, I think INR will continue to depreciate. In fact, as Jyoti was speaking just now, our investment banks that we spoke to about their FX forecast, they see around 80 rupees for $1 as the exchange rate in the 12 months going forward. So if I was invested in USD and I had some commitments which would require me to transfer back home in INR, I would hedge the risk for now, because I do see a depreciation. We do see a depreciation of the INR in the next 12 months.
Well, that's quite interesting, because this has been the trend for a while, right? So rupee has been depreciating of late for past couple of years. So that brings me to the next question. Like you rightly said, in such scenarios, we have a lot of Indians who want to send their kids out for education, or a lot of Indian investors who wants to probably, park their monies outside India. So what are the best hedging tools that are available today, and so that, you hedge your capital against the slide in the rupee, as well as you make a decent ROI on your investments? So what are a few products, if you could just highlight,
Okay, so I'd like to separate the two. So hedging and ROI will be separate. As in, The ROI I generate will be on my portfolio of investments, which again depends on investor risk profile, time horizon, cash flow needs, what currency he prefers. Does he want returns in GBP? Does he want returns in US dollar? Does he want returns in euro? Or does he want return in INR? Now, once these returns that the client is targeting, say for example, he wants to make 8 to 10% annually in US dollar terms, but he has a commitment. For example, he has the college education of his child in that he has to pay in dollars for studies abroad, and his return is around 8 to 10% US dollars. We would recommend some simple yet effective hedging tools that can be used over, say, 12 to 18 to 24 months. For example, the most simple plain vanilla would be buying a call option on USD, where you are long USD and short INR, because if we have a view that USD will appreciate against the INR in the next 12 to 18 months, which is what consensus estimates of economists from the banks that we were talking to are, why not spend a little premium and get a call option on USD against the INR? Or you could even enter into a warrant format where the warrant is issued by, say, an investment bank like Goldman Sachs or Morgan Stanley, wherein if INR USD goes above a certain level, for example, you strike at 75 and it goes above 76, 77, you can set the specifications according to your time horizon and your limit, that the warrant starts paying off as soon as rupee depreciates beyond a certain level. So in the derivatives market, especially for the FX, there's a lot of tools that the investor can use to hedge his INR exposure. Of course, if the view that you have is against, in the end, if what happens is against the view that you had, for example, if rupee appreciates, then of course you lose the premium for the option or the hedging strategy that you invested in. But I feel that the premium that you lose in the short run is worth the long-term hedging for currency that someone would require in case they have cash flows that they need in INR.
Swapnil, I would like to have similar remarks from Andrew on this. Similar question.
Hi.
Hi.
Your remarks on these points, because it's relating to his market and the same thing.
So, I mean, specifically, we are very much hedging. We invest in our own hotels. So, from our portfolio for our clients, yes, we can access to other markets, but we think it's safer having the control. So we buy our hotels with cash. So I mean, at the moment, we're not paying any. We haven't had to leverage. We're not having to pay any commitments to lenders. So what we find safer for our investors is something that is they can invest in property title deeds, and we're just giving them a rental agreement for 5 years. We find that it's a lot safer for our clients, and 5 years is about right. Sometimes it can be a little bit shorter if the client wants. They can sell at any time. It's their property. But we feel that 5 year in hotel investment, which is our specialist, even though we have access to others, is going to be safer for our investors.
Swapnil.
So I would to go to Arnav sir now. Arnav sir, as realtors, we have seen that there is a lot of phase of consolidation post GST, post demonetization in real estate. So larger players are actually acquiring, the smaller players, or rather taking up projects which are stuck. So do you see a similar phase of consolidation in your industry as well? Because a lot of developers who just operate 2 or 3 centers, for them running this, and to weather this storm currently, looks very difficult. So they might start defaulting. So do you see this as an opportunity for large players like you to kind of, take over these companies and, fuel your expansion plans?
That's me, Swapnil.
Yeah.
Yes.
Sorry, my question was to Arnav sir.
Okay.
So yeah, as I said, the industry is pretty nascent in the country, right? And it's seen an exponential growth. So today we've come to, from growth phase, we've come to a plateau phase. And this is common for any other industry also. So there will be players who will remain, and there will be players who will either get weeded out or will merge into larger this thing. As far as we are concerned, we'll be more keen from a real estate perspective, and we'll see the pluses and minuses of each opportunity that comes to us. Our product is pretty standard, so taking over businesses which have their own specification as such might not be as conducive to our business plans. But if the real estate makes sense, and if we see a long-term, this thing what you call positivity in taking over that asset, we are open to looking at those options. But the other aspect where I think we can do phenomenally well is hospitality and retail. During these scenarios, I think these are the two segments which have been impacted the maximum. And if somewhere the co-working segment can be fitted into these assets, we as WeWork are more than happy to look at those opportunities. And again, because these models work on a minimum guarantee revenue share model or a management contract model, so the owners are pretty used to that kind of format. So it becomes easier for our future strategy also from a lease perspective to match our expectation of the market.
Yeah, sure. I completely agree with that, sir. Sharad bhai, I just want to check with you, organized warehousing being only 10% of this sector, right? So mostly the sector is still very, very unorganized, just like ours. Yeah, so what would you like to tell the participants about the opportunities for us as realtors, especially with the onset of FTWZ, and how do you see the growth? So what are the opportunities available? If you just, there are a lot of realtors on this platform. So if you could just tell us what are the opportunities?
Sure. I think I slightly touched on this earlier on. When you look at India as a whole, and you look at the warehousing and industrial story compared to more mature markets, we're a fraction of where China is. I think currently we're probably 1/20th of the supply that China operates in. So they're probably 10 years ahead of how we have grown this sector in India. So I think there's tremendous opportunity. You're talking about the same size population. And at the end of the day, and that's why you're continuously seeing a significant push on telecoms, on e-commerce and foreign investment that's coming into India, because there's a huge amount of untapped demand. And with that, requirements will be there for warehousing space and supplies. So I think that there's a huge and a very positive story for the long term. Now, the next 12 to 18 months is going to be tough. There is absolutely no doubt about it. I don't think any one sector is agnostic. I think we're all going to be in for a very tough time. We're experiencing events that are far more serious than what we went through in the global financial crisis. I don't think India in particular is immune from that. And so we're gonna struggle to get back to maybe where we were 6 months ago. Having said that, long term, I think there are some very key fundamentals. What are the opportunities for the country? We need to continuously and invest, and the government needs to focus on these structural reforms, which it has done in the past. I think the whole GST and the evolution of how that's planned out has been very successful, especially for the warehousing and logistics industry. You've seen much more consolidation of space. Tenants previously may have had 50 centers spread out across the country, and now they're consolidating that into maybe 5 or 7 larger grade A facilities, and that is continuing. Everyone hasn't got their GST story correct and finalized as yet. So there's still a lot of demand out there for quality consolidation in key areas. I think one market which hasn't been talked about a lot, and a lot of people are feeling that is going to be the manufacturing. If we look at India today, it certainly will be the hardest hit, in particular auto, as we all know. Auto was already on a decline pre-COVID, And I think it's destined for a very tough 12 months. But having said that, we're seeing a seismic shift of noises from the tenant universe of trying to de-risk themselves from, say, China, where they've got all their eggs in one basket. And I think you'll see a pretty significant push to diversify that risk to other Southeast Asian countries, of which India will be at the forefront. So what do we need to do? We need to make sure that we are continuously investing in infrastructure, continuously investing in structural reforms to make it attractive to invest foreign capital to the country, both in terms of an investment perspective and from a manufacturing perspective. And India, in my view, is going to continuously grow from, we've seen in the last 3 years, the ease of doing business. It's risen up in the rankings. And I think with the current regime, I think, and the policies that we have in place, we're going to continuously see that trend. So I think there's a tremendous amount of opportunity in this space. And that's predominantly because we as a customer now are becoming more evolved. We as a customer are becoming more demanding. We want things quicker. And so, a big opportunity for which we look at is inner city distribution, multi-story facilities within cities as opposed to the peripheries, because, I need to get my groceries within 1 hour. I can't necessarily wait 1 day for them to come in. So there's a lot of potential opportunities that we foresee in this sector. And this is why we are so bullish in the long term. But rest assured, the next 12 to 18 months is going to be tough.
Great. Your final note to our audience, sir. So there are a lot of realtors. So one final tip which you want to share with them where they can excel in this business of warehousing, what opportunities can they encash on?
Well, I think first and foremost, continue what you're doing. I think you need to continuously reach out to the likes of, Indospace, who was a developer, who was an investor, build relationships with the customer segment, with the key tenants that, you wish to contact with, partner with developers or partner with existing landlords. I think that is absolutely crucial. It isn't just about looking on the digital media and seeing what space is available and trying to broker two partnerships together. I think we are now more involved, and I think that both the developer and the tenant has become a bit more, I would say, onerous in terms of its requirements, and expect some more quality in return from whether it's a broker, whether it's an IPC. They have to be bringing value add. So I think the biggest piece of advice I would give to you is to, if you're representing a tenant, understand their business, understand what it is that's actually driving profitability for that business. And therefore, then you can go out to the market and try and identify the right type of space for them. And, it's not necessarily about, in my industry, in the warehousing side, finding the cheapest rent possible. The rent is a relatively small component of the overall logistics supply for a customer, like a DHL, like an IKEA. But it's efficiencies that are going to drive their profitability and bottom line. So how sustainable is the building? How accessible is the building? What we've mentioned, all the health and safety features, etc., that we've talked about today. But how are they getting more for their money in terms of efficiency? So that's the biggest piece of advice I could probably give to realtors.
So that's it. So quality is never an accident. It is always a result of intelligent effort. So that is my take on that. And Jyoti, ma'am, your final note for our participants. What would you want them to live with? How they should address their client?
Talking about all the part. Okay, see, the general thing is like in our industry, we always say that stay invested. I mean, I know we have two different things in the investment horizon in the financial industry or even the behavioral finance. We always say there is greed and fear, and we always tell people that fear not. I mean, in a downside market, investors generally try to withdraw and exit, and we often tell them, don't take any hasty actions when it comes to your investments. There's always an opportunity for averaging out. For every downside, there's always an upside which comes back. Maybe it takes longer. And just stay positive and just stay glued on. And when you're confused, just reach out to us. Reach out to the experts, and we'll be able to tell you what to do. I mean, advice is free. I mean, it can't be cheap, but advice is free. So please, link up, connect with us.
Yeah.
So great. Can I go to Arnav sir? Arnav sir, can you have the final note from you to our participants?
So honestly, with what Sharad and Jyoti ma'am have said, I totally concur with that. I would only would request that we need to think out of the box now. In the last recession that happened in 2008, in India, the residential market got hit really badly, and then that was the time, specifically in India, the concept of zero down payment and staggered EMIs and all that came in. So that was like going away from our standard way of thinking at that time. And I think this is another opportunity, not just related to one segment in real estate, but overall. And to what Sharad also mentioned earlier, look at partnerships rather than just business. Let it be tenant-landlord relationships, let it be a consultant, a tenant or consultant landlord relation. Everybody's going through the same pains, and we just need to be aligned together, look at it from a business perspective, and think outside the box. The way of doing business needs to change, specifically in India. The way we've been approaching business needs a different approach completely from a commercial angle. And that if the consultants can help like-minded developers and like-minded tenants, it just eases the business and speeds up the closures of transactions as such.
Yeah, sure, sir. So it is said that not the strongest species or not the cleverest species. The one who survives is basically the one who changes, adopts the change, right? So with this, I will go to Andrew for his final note. Andrew, can you address our clients with your final note?
Yeah, what I'd say is just echo what everyone else has said. Look, right now is the best opportunity to invest, probably. Mainly because everyone's gone through the same pain. Everyone would understand that, after the dip, there will be a recovery. It's now understanding where that client's portfolio requirements sit and what risks they're looking at. But certainly in terms of what we deal with day in, day out, a lot of the questions that we get asked previously before COVID was what happened to damage the company. So what I then do say is the opportunity to invest over here right now is vast. There's some great returns, and it's going to recover. We've gone through a little dip, but of course it's going to recover. So my closing message will be is one of positivity. Right now, it's probably the best time to start looking and seeing what deals that you can get.
Yeah, that's right. That's right, Andrew. So I would now like to call upon our president, Mr. Sumant. Sumant, if you could just tell us, why you think that a broker should evolve and not just be a broker and be a asset advisor now. So if you could just throw a little bit of light on that.
Yeah, sure. First and foremost thing, Swapnil, see, sentiments are temporary, fundamentals are permanent. So what's happening? I think I should not really worry about it. Second thing is, see, every crisis always created, new opportunities. So new sectors, new industries emerge, new asset classes emerge. 5 years ago, we never heard about co-working spaces. Now we have something called co-working spaces. So the new asset classes will keep on emerging. So markets change, and when every time actually when you have a crisis, right? Markets keep emerging. So I think we should keep. First thing is we should always look for opportunities, and we can only look for an opportunity only when you stay positive. And most importantly, for me, if you ask me, I strongly believe that the real estate market will come back strong, because no matter what people think. Okay, so if a commercial sector is affected, probably because some companies have been announcing about work from home. See, the homes again actually are part of real estate. So if this asset class is affected, and the other asset class emerges. So see, real estate is here to stay. Okay, so we just need to look for opportunities. So we need to understand actually how the market is evolving, shaping up, so that we can capitalize on those opportunities. So it's time for innovation. So I think it's time for strategic innovation. It's time for financial innovation. It's time for operational innovation, because we need to see we have evolved over a period of time. See, human race as such actually has evolved for thousands of years. It has seen so many pandemics. Okay, so we still survived. So we need to learn to evolve and to adapt. So once we, I think, start working towards it, right? I think nothing is really difficult. I think we'll definitely emerge strong, and we'll be doing great. For not only for ourselves but to the entire sector and to the world.
I'm sure, Sumant, if we have a leader like you, showing us the way, I'm sure we can evolve. We can excel in everything that we do. I would say that you can make money as realtors. You can make money, or you can make excuses. Which one do you prefer? So hearing all these panelists, there is a clear understanding that a lot of money is to be made in market going forward, and this COVID is not going to keep us low. So with this, we have come to the end of a very, very interesting and insightful seminar. And I really want to thank all my panelists on behalf of SMART and NAR India. I would really like to thank Jyoti ma'am, Arnav sir, Sharad sir, and Andrew to oblige and be a part of this webinar. It was really, really insightful hearing from you. And thank you so much for your time.
Kshitij.
Thank you.
Kshitij, I missed Kshitij. Yeah, Kshitij, I'm extremely sorry for this.
No problem.
Really, really, I express my gratitude to all of you. Thanks for coming down, and it was really insightful.
Can I say something?
Yeah, please, ma'am, please.
Yeah, just I want to share, but don't make this COVID a reason to not progress amongst yourself. This is just one. I don't know. I think it's just some sort of a revelation to probably recreate yourself. And I think a lot of the most successful businesses across the globe has happened during crisis. So let's not just make this a reason to sit at home. Do what you have to do, but just don't sit at home. And I'm sure we'll interact. I'm sure we'll all meet each other again in a panel, maybe face to face.
Yes.
Touch and go, maybe. Yeah, definitely. But please, going forward, just address me as Jyoti. We can just cut off the ma'am. Yeah.
Yeah, being in service industry, I think we are quite used to it.
If I was a politician, probably I would have enjoyed that.
Right. Well, Swapnil, I think it's time. So let's a final goodbye, adios to everybody.
Thank you so much, everybody, for being.
Sumant, bye.
Thank you, Ajit. Yeah.
Thanks, everybody.
Thank you very much.
See you.
Thank you, Sharad sir.
See you. Bye-bye.
Thank you, Arnav sir. Thanks, Kshitij. Thanks, Andrew.
Thanks.
Cheers. Take care. Bye-bye.
Cheers.
Take
Bye.
care.
Bye.
Bye, Kshitij.